Are you new to investing and you have a fear that you might be missing out on IPO stocks or initial public offerings? Or maybe you're not new to investing, but you have a fear of investing in IPOs because you believe they're too risky. Then this video is for you. In this video, using Rocket Company, ticker symbol RKT as an example, I'm going to show you my 5-step process for finding monster IPO stocks that have the potential to double, triple, or more in price. I'm going to show you how to limit your risk and maximize your profits. Let's get started. I'm Justin Saffel, and this is my Creative Vest YouTube channel. Thank you for joining me. Before we move on, there's something that I need to ask of you. Smash the like button, subscribe to the channel, and ring the bell so you can get alerts to my videos that I post every Tuesday. Being able to post these free education videos, it means a lot to me, and it also takes a lot of time and energy, so I can't do it without your support. Since we're on the topic of education, please keep in mind that these videos are for educational purposes only and should not be construed as investment advice. Please do your own research and place your own trades. Ever since I started investing, I've always been super fascinated with IPOs or initial public offerings because of the possibility of getting in a little early on a company's stock and the potential of big rewards. That said, whether you're a seasoned trader or you're just getting into investing, there's one thing that we must understand and keep in mind, and that is that without any risk, there's no reward. I've been investing in growth stocks for about 10 years, and if there's one thing I learned from IPOs is that fortunes can be made very fast in IPOs, but they can also be lost very fast if you don't control your risk. There's a quote that I really like. You can either learn from pain or you can learn from insight. I've learned from all the pain, so let me show you my insights. Here is my 5-step process for investing in IPOs to maximize your profit and minimize your risk. And if you stay tuned until the end of this video, I'll be doing a stock analysis on recent IPO Rocket Companies, ticker symbol RKT. Step number 1, know what kind of market you're in. IPOs tend to do their best in very strong bull markets. If you're not in a very strong bull market, the risk that you're going to take a loss on this new IPO stock goes way up. You see, stocks move with the general market, and even more so if they're recent IPOs. As a general rule of thumb, a stock moves 3 to 4 times the market averages. This means that if the market, S&P 500 or the NASDAQ, goes up 1%, then your stock goes up 3 to 4%. Now on the flip side of that, if the general market comes down 1%, then your stock's coming down 3 to 4%. And if you're invested in an IPO, because these stocks are generally more volatile than average stocks, this effect is magnified. So know your market. And one way you can do this is by subscribing to a market service that provides general market indicators. I've subscribed to Investors Business Daily for years to get their general market pulse, which describes which phase the market is in. Is the general market in an uptrend? Is it in an uptrend under pressure? Or is it in a correction? And you should know that I'm not getting paid for saying this. If you don't know by now, the book, How to Make Money in Stocks and Investors Business Daily is how I got started learning stocks. I've got a video on it, the link right above, that'll tell you more about that. Anyway, William O'Neill authored this book and founded the company Investors Business Daily, and I'm really just trying to give credit where credit is due. Now, for the remaining steps, I'm going to be using the acronym NEST, N-E-S-T, to describe how to select the best IPOs. N is for new. Does the company have a new product, service, or way of doing something that's new and innovative and better than the way it's been done before? Is the company a part of a new trend? Or is the company's products and services really changing the way that we live our lives? Take, for example, the company Amazon, ticker symbol AMZN. Amazon issued their IPO at $18 per share with a valuation of about $438 million. Since then, the valuation of this particular company is now an astounding $1 trillion. So, would you say that Amazon's products have changed the way that we live and shop? I would say the answer is, of course, yes. Okay, so we've gotten through the first two steps. Pretty easy, right? So if you feel like you're getting the hang of this and you're starting to understand better how to pick IPO stocks, then in the comments below, respond with a yes. Let's move on to step 3, the E in our NEST acronym. E is for earnings, or earnings per share, EPS for short. Because IPOs are new, they tend to have very little earnings history. The reason is that the SEC, or the Security Exchange Commission, which is the governing body that regulates the reporting requirements for publicly traded companies, they don't require companies to report this kind of information prior to going public. That said, when investing in an IPO, you must insist that current quarterly earnings be a minimum 20% or better, preferably triple digits, and accelerating quarter over quarter. The higher the numbers and the more history, the better. I'll cover this more in our Rocket Companies example analysis at the end of this video, so please stay tuned. The next step, step 4, is our S in our NEST acronym. S stands for sales. We are looking for a minimum of 25% sales increases quarter over quarter. Like earnings, however, we prefer much more, triple digits even, and accelerating. Here's a little bit of a pro tip. Since the company is probably new, they might not yet be profitable, and they might not yet show earnings. If this is the case and they don't have current earnings to show profitability, then you must, without exception, insist that sales are growing 100% or more quarter over quarter. Finally, step number 5. Step number 5 is the T in our acronym NEST, and T stands for the technical setup. This step is knowing when to buy. However, I want to preface this step with a very, very important rule. Never, ever, without exception, buy a stock the day it issues publicly traded stocks. And here's why. 55% of all stocks undercut their day one low within 3 weeks of issuing their stocks. And on top of that, nearly 90% of all stocks eventually undercut their day one price range. The point I'm trying to make is that there's no real good reason to take on the unnecessary risk of buying a stock day one of its IPO. Instead, you should probably wait until the stock undercuts the day one low of its IPO and sets up for an official buy point. So what does a stock like this look like? Well, I'm going to walk you through a recent IPO example so you know what to look for and you know when to buy. First, let's take a look at the market. Is the market in a confirmed uptrend? You can see here on the screen from MarketSmith, a sister company of Investors Business Daily, that the market is in fact in an uptrend. Market in confirmed uptrend. Now, is the market in a strong bull market? If we look at the NASDAQ composite, you'll notice that we went through this very deep and steep downtrend, bear correction, and we've since been trending up and up and up. And now we are well into all-time highs. In addition to that, this has been the fastest recovery from a bear market in US history. So I would say we are definitely in a strong bull market. Okay, now for our NEST acronym. N is for new product, new service, or trend, which is changing the way that we live. In order to find this out, we have to do a little bit of research. So I'm currently looking at the Rocket Companies Incorporated website. So we can see that they're a mortgage company, and Rocket's been around for a while, so most of you might be familiar with the company. But let's dive a little bit deeper into their subsidiary companies. Okay, so when we take a look at Rocket Mortgage, we notice that, or Rocket Companies rather, we notice that there's one company, Rocket Mortgage, which we just talked about. There's another company, Amrock, which is apparently a leading provider in title insurance services, property valuation, and settlement services. They also have Nexus Technologies, which is a fintech company focused on creating and delivering innovative solutions for smart leading processes. Okay, so they're in the home mortgage business. So you might say, well, Justin, why is that new and why is that innovative? Well, let's look at the underlying trend. Mortgage loan rates are at historic lows, and the real estate market is growing at a blistering pace. And who stands to benefit from this trend? Well, mortgage companies, right? Let's now check out the stock chart for Rocket Companies Incorporated, ticker symbol RKT. Now that we've checked the in box for Nest, what's next? Well, it's E, earnings. So does it have what we're looking for? I would submit that yes, it does. If we look over here at the earnings column for the last 1, 2, 3, 4 quarters, the company has posted triple-digit earnings gains, 600, and 999% earnings gains. So the answer is undoubtedly yes, the earnings are there. Okay, let's look at sales, the S in our NEST acronym. So right here, we're looking at the sales quarter over quarter. And if we look at the last 4 quarters, 1, 2, 3, 4, sales have increased by 42%, 42%. And in the last quarter, 116%, showing not only quarter over quarter increases, but also in the last quarter, triple-digit sales increases. And for a company that's as large as Rocket Mortgage, that shows a big demand for its product. So the answer to the S is, I would say, yes. Are their sales growing? Yes. Quarter over quarter, big time. Finally, where do we buy the stock? The T in Nest, or the technical setup. Well, if you're familiar with William O'Neill's book, How to Make Money in Stocks, and you're a creative investor, then you know that we buy stocks breaking out of base consolidations and making new highs. Switching over to the daily chart here, I want to show you a couple of areas where you could have bought Rocket Companies and potentially some other areas in the future where you might be able to purchase Rocket Companies. So if you're interested in the stock, one of the places that you could have purchased the stock is right here as it broke into new highs. You can see the stock just a few days ago broke above around $27 a share, and it did it on pretty substantial volume. And that breakout could have been a potential buy area. Now, another potential buy area is when it comes back to that breakout area around $27 a share and starts to see support. If it sees support and can bounce and go up, that's a good buy area that you could have bought it too. Now, in the future, one thing to keep in mind is that the stock, or the company rather, reports earnings in just 6 days. So if you're buying it down here, there's a chance that you're not quite at a profit yet. You don't have a cushion going into earnings. And you really do want to have a profit cushion going into earnings, because earnings can be a bit of a crapshoot. The stock could gap up and do really well, or it could gap down and do really poorly. Another option would be to buy it at an all-time high near $30 a share. In this particular area, if you buy it, you want to see it break above that $30 per share on heavy volume. If you've followed me this far, then you've just learned how a creative investor invests in IPOs to minimize their risks and maximize their profits. If you want to learn more about how I learned to invest in IPOs, then check out the 2 linked books in the description below. If you're interested in investing and you want to accelerate your learning curve, then visit my website linked in the description below, where you can get access to my stock list, buy and sell alerts, one-on-one coaching, and additional educational content. Or if you like these videos and you want to show support so I can keep creating this excellent content, then check out my Patreon page, where you can pledge and get access to my individual stock portfolio, where I'll show you my picks that have netted me over 150% return this year alone. If you enjoyed this video, then smash the like button, subscribe to my page, and ring the bell. Thank you for watching.